Hi everybody, thanks again for tuning in to another video from me, Adriana Bates with Clear Mortgage. I wanted to record this video to discuss something that is occasionally occurring in this market here in Kansas City and ultimately nationwide with this craziness going on in our current real estate market. So what happens when an appraisal comes in lower than the offer a consumer has put in on a home? So just to go over some really quick mortgage jargon terms, an appraisal is something that we as the lender order from a third party to ensure that the piece of property that we're lending our collateral on is worth what someone is paying for it. And the reason that we do this is in case of a foreclosure situation where the borrower doesn't make their payments, we have to make sure that we can recoup our collateral or the money that we've lent out on it. So we do hire a third-party person to go out and look at the market and sales comparables in the area to determine that value. So it isn't the cost to rebuild, it is based on the market and the sales comparables for properties in the area. So we typically, borrowers have multiple options when an appraisal comes in low. One of the things I did discuss in working with Clear Mortgage, however, since we are locally owned, we do have the appraisers that we work with on our independent panel are ones that we know, like, and trust very, very well. Meaning we've worked with them multiple times and we trust them and we have really great lines of communication with them. So for example, as a real estate agent, if we were working on a transaction with you and one of our appraisers was having a hard time coming up with value, they would reach out to us and let us know that we may have to discuss with the agent to find some additional sales comps or help explain to them how they did determine that purchase price or sales price. So as a consumer, however, if you're watching this video and tuning in and your appraisal has come in low and you're wondering what options you have, I'd be happy to go over those with you. So first and foremost, you can renegotiate your offer. So if there is a clause, it typically comes in your contract that there's an appraisal contingency. So now though, in this competitive market, sometimes those appraisal contingencies are waived to make your offer a little bit more competitive for the seller. So if you do have that appraisal contingency within your contract and the appraisal comes in low, your agent will then negotiate on your behalf for the listing agent and the seller to possibly come down in the purchase price. If that doesn't work, then you're going to have to discuss with your lender some other options, which could be dispute that appraisal. So your agent and your lender will review that appraisal report with you and take a look at some of the sales comparables that the appraiser did use. In some cases, appraisers, they are human. They might miss a really good sales comp in the area that really drove up the value. So in reviewing that report, you can dispute the comparables that were used and work with your agent to find some better ones to hopefully bring that value up. Another option that you could possibly utilize is to order a second appraisal. This will be something that you'll have to pay out of pocket, but if the appraiser just isn't budging on the dispute, you can get another appraisal ordered. That is risky, just because if it does come in low again, then you are out that money. But if it does come in higher, make sure that you have a conversation with your lending professional to ensure that the underwriters will accept that value as opposed to the lower one that came in earlier. There is another option. If the appraisal does come in low, you can simply bring in the difference of the appraisal value versus the purchase price. So for example, let's say you're buying a $200,000 home and the appraisal comes in at $190,000. We are going to lend on the lower of the two, meaning your sales price is $200,000. The appraisal value came in at $190,000. So for your loan, we are using the lower of the two at that $190,000. So the difference you'll have to bring at closing will be that $10,000 in your funds to close. So that's an additional $10,000 you'll have to come out of pocket. So As a lender, we always try to strategize and come up with some pretty unique solutions to this. And we can look at things like lowering your down payment, maybe using lump sum MI so that you don't have PMI if you go less than that 20% down. But we can get creative in these situations as well. What it comes down to, however, is that you never want your appraisal to come in low. It's just another bump in the road in the home buying process that is frustrating and can be confusing. So just know that a low appraisal, can impact your offer, and it's important to know your options when you're going into this type of market. Always work with a trusted lender and always consult with your real estate agent so that you receive accurate appraisals and that you're buying a house that is worth what you're paying for it. So if you have any questions about this or wanted to kind of discuss anything further about the home buying process, as always, reach out. Adriana Bates, Clear Mortgage, and keep an eye out for future videos. Bye.